Hey everyone, welcome back to Investors Insight 2.0, your go-to channel for smart investing and economic updates. The year 2008 saw the birth of Bitcoin, a revolutionary digital currency. Emerging from the global financial crisis, Bitcoin operates independently of governments and central banks. Its cryptographic security has attracted millions of users and investors worldwide. Bitcoin's journey is marked by explosive growth and dramatic volatility. It has disrupted the traditional financial landscape. Challenging the dominance of central banks, Bitcoin offers an alternative system for transferring value. Blockchain technology has sparked innovation across various industries. However, mainstream adoption has faced hurdles. Bitcoin's decentralized nature presents challenges, with no central authority to mitigate risks. Its price volatility makes it a risky investment. As Bitcoin evolves, it remains to be seen if it can fulfill its promise of a more accessible financial future. The meteoric rise of Bitcoin has not gone unnoticed by seasoned investors. Warren Buffett and Charlie Munger have been vocal in their skepticism towards Bitcoin. Known for value investing, they question Bitcoin's lack of tangible assets and potential for speculation. Buffett has compared Bitcoin to rat poison squared. He likens it to a mirage that will disappear. Munger calls Bitcoin stupid and immoral, predicting regulation will end it. Their skepticism highlights a divide between traditional finance and cryptocurrencies. Despite the skepticism from some quarters, Bitcoin offers a range of potential advantages that have fueled its rise and continue to attract supporters. One of its most appealing features is its decentralized nature. Unlike traditional currencies which are controlled by central banks and governments, Bitcoin operates on a distributed network, making it resistant to censorship and manipulation. This decentralization also provides a level of financial freedom that is not possible with traditional systems. Another key advantage of Bitcoin is its security. Transactions are secured using cryptography, making them extremely difficult to counterfeit or reverse. This cryptographic security, coupled with the transparent and immutable nature of the blockchain, provides a high level of trust and accountability. Furthermore, Bitcoin transactions can be made without the need for intermediaries like banks, reducing fees and increasing transaction speed. For individuals living in countries with unstable currencies or limited access to traditional banking services, Bitcoin offers a viable alternative for storing and transferring value. Its borderless nature allows for seamless cross-border payments, making it particularly attractive for remittances and international trade. While challenges remain in terms of scalability and regulatory clarity, Bitcoin's potential to revolutionize finance and empower individuals cannot be ignored. While Bitcoin presents a compelling vision for the future of finance, it is essential to acknowledge the challenges and drawbacks that come with this emerging technology. One of the most significant hurdles is Bitcoin's notorious price volatility. The value of Bitcoin has experienced dramatic swings, creating uncertainty for investors and businesses alike. This volatility makes it difficult to use Bitcoin as a stable store of value, or as a reliable medium of exchange for everyday transactions. Another challenge is scalability. The Bitcoin network has limited transaction processing capacity compared to traditional payment systems. This limitation can lead to slower transaction times and higher fees during periods of high network congestion. While efforts are underway to improve scalability through technological advancements and second-layer solutions, it remains a significant concern. Furthermore, the regulatory landscape surrounding Bitcoin remains uncertain in many parts of the world. Governments are grappling with how to classify and regulate cryptocurrencies, creating ambiguity for businesses and investors. The lack of clear regulatory frameworks also raises concerns about consumer protection and the potential for illicit activities. Addressing these challenges will be crucial for Bitcoin to achieve mainstream adoption and reach its full potential. The environmental cost, Bitcoin's energy footprint. As Bitcoin has gained popularity, so too have concerns about its environmental impact. The process of mining Bitcoin, which involves solving complex mathematical problems to validate transactions and secure the network, requires a significant amount of energy. The energy-intensive nature of Bitcoin mining has raised alarms among environmentalists and policymakers alike. The majority of Bitcoin mining operations are concentrated in regions with cheap electricity, often derived from fossil fuels. This concentration has led to a surge in demand for fossil fuels, contributing to greenhouse gas emissions and exacerbating climate change. The environmental cost of Bitcoin mining has become a major point of contention, with critics arguing that its energy consumption outweighs its potential benefits. Efforts are underway to mitigate the environmental impact of Bitcoin mining. Some mining operations are transitioning to renewable energy sources such as hydroelectric power and solar energy. Additionally, technological advancements such as proof-of-stake consensus mechanisms aim to reduce the energy consumption of blockchain networks. However, the challenge of balancing the benefits of Bitcoin with its environmental footprint remains a significant hurdle for the industry to overcome. Ethical considerations, from darknet markets to responsible innovation. Beyond its environmental impact, Bitcoin also raises a number of ethical considerations. The decentralized and pseudonymous nature of Bitcoin has made it attractive for illicit activities such as money laundering, tax evasion, and purchases on the Darknet. While Bitcoin's use in illegal activities represents a small fraction of overall transactions, it has attracted scrutiny from law enforcement agencies and regulators worldwide. Another ethical concern is the potential for Bitcoin to exacerbate existing inequalities. The technical complexity of Bitcoin and the volatility of its price can create barriers to entry for individuals with limited financial literacy or access to technology. This disparity raises concerns about Bitcoin further marginalizing vulnerable populations and widening the digital divide. Despite these challenges, it is important to recognize that Bitcoin itself is a neutral technology. Its ethical implications depend largely on how it is used and regulated. Promoting responsible innovation in the cryptocurrency space, fostering financial literacy, and implementing appropriate regulatory frameworks will be essential for mitigating the ethical risks associated with Bitcoin and harnessing its potential for good. Finding a balance. Navigating the uncertain future of Bitcoin. The future of Bitcoin remains uncertain, characterized by both immense potential and significant challenges. Its decentralized nature, cryptographic security, and potential for financial inclusion have captivated the imaginations of millions. However, its volatility, scalability issues, environmental impact, and ethical considerations cannot be ignored. Navigating this complex landscape requires a balanced approach. Policymakers must strike a delicate balance between fostering innovation and protecting consumers, while also addressing the environmental and ethical implications of cryptocurrencies. Investors must approach Bitcoin with a healthy dose of skepticism, recognizing both its potential rewards and its inherent risks. Ultimately, the success or failure of Bitcoin will depend on its ability to address its challenges and fulfill its promise of a more open, accessible, and equitable financial system. Whether Bitcoin ultimately proves to be a revolutionary force or a risky gamble remains to be seen. However, its impact on the world of finance and beyond is undeniable, forcing us to rethink traditional notions of money, value, and the nature of trust in the digital age. Conclusion: revolution or risk, the verdict remains open. The emergence of Bitcoin has sparked a global conversation about the future of money and the role of technology in shaping our financial lives. Its proponents hail it as a revolutionary force, capable of democratizing finance, empowering individuals, and driving innovation. Its critics, however, view it as a risky and speculative asset, plagued by volatility, environmental concerns, and ethical dilemmas. As Bitcoin continues to evolve, it will undoubtedly face both opportunities and obstacles. Its ability to overcome technical challenges, navigate regulatory uncertainty, and address its environmental footprint will largely determine its long-term trajectory. Whether Bitcoin ultimately fulfills its transformative potential or succumbs to its inherent risks remains an open question. However, one thing is certain: Bitcoin has irrevocably altered the financial landscape, challenging us to rethink long-held assumptions and consider new possibilities for the future of money. The verdict on Bitcoin's ultimate legacy may still be out, but its impact on the world is undeniable, leaving an indelible mark on the evolution of finance and technology. Conclusion: revolution or risk, the verdict remains open. The emergence of Bitcoin has sparked a global conversation about the future of money and the role of technology in shaping our financial lives. Its proponents hail it as a revolutionary force, capable of democratizing finance, empowering individuals, and driving innovation. Its critics, however, view it as a risky and speculative asset, plagued by volatility, environmental concerns, and ethical dilemmas. As Bitcoin continues to evolve, it will undoubtedly face both opportunities and obstacles. Its ability to overcome technical challenges, navigate regulatory uncertainty, and address its environmental footprint will largely determine its long-term trajectory. Whether Bitcoin ultimately fulfills its transformative potential or succumbs to its inherent risks remains an open question. However, one thing is certain: Bitcoin has irrevocably altered the financial landscape, challenging us to rethink long-held assumptions and consider new possibilities for the future of money. The verdict on Bitcoin's ultimate legacy may still be out, but its impact on the world is undeniable, leaving an indelible mark on the evolution of finance and technology. Bitcoin's journey to $96,965.43 has been a wild ride, filled with triumphs and controversies. Whether you see it as the future of finance or a speculative bubble, one thing is clear: Bitcoin is reshaping the financial landscape. What's your take? Is Bitcoin a revolution or a risk? Let us know in the comments below. Don't forget to like, subscribe, and hit the notification bell for more insights on investing, economics, and the future of money. Thanks for watching, and we'll see you in the next video.